Good morning, everyone. Thank you for taking time out of your Saturday to join us this morning, and welcome to this educational presentation where today I want to talk to you about two trading components that I really believe will change the way you trade. And the reason why I say that is because this is one of our most requested presentations from students and potential students around the world. So we've decided to broadcast it again because we really feel it will help you, and you'll be able to research what I'm going to be teaching you as soon as we conclude today's presentation, to see if it really does help you, and I'm sure you'll find out that it does. Now, for example, let's take a look at this older chart of CHK. And by the way, many of these charts are going to be older, but it's really not so much the time frame we're looking at, or the time in which these trades or setups took place. It's more about trying to teach you this concept so that you can apply it to your own trading methodology, whatever it is. So we look at this, and just off, face value, it looks like we're going up, right? We're in a nice, real strong uptrend. So most traders would say, well, Steve always says you got to trade with the trend, so we should be a buyer, right? But then what happens when all of a sudden it goes straight down? And this can work to the opposite direction as well. You can see stocks or futures, currency pairs, doesn't matter what the market is, going straight down. So right away, you'll surmise that this is in an obvious downtrend. But is it really? Well, here's the beauty of today's educational class. I'm going to share with you two trading components that would have known in advance that you were not in an uptrend or a downtrend in these examples, and you could have taken advantage of each one of these, okay? And this is what we mean by two trading components that will really change the way you trade, because you can apply them to any method, any strategy, any technique you're currently using, and on top of that, any market and any time frame. So today we're not going to really be talking about an actual strategy or an actual way to trade. We're going to be talking about components that you can actually add to anything you're trading, any market, any time frame, once again. And here's the great thing about this. Everything is one click away on the PTS Primo charting platform. We designed it that way to teach you how to trade and to make it as simple as possible. So welcome to this Saturday presentation. My name is Steven Primo, President and Founder of Specialist Trading. If you're new to my presentations, well, I've been trading for 44 years. I started my career on the trading floor of the Pacific Stock Exchange. I was on the floor for 16 years, and 9 of those years I was a specialist. So that's where we get the name Specialist Trading. If you ever Google those pictures of the floor in the 1920s and in New York, if you see these guys making these weird hand signals with paper all over the floor, those are most likely specialists. Those specialists were the gentlemen behind those large podiums or panels. And we used to basically make markets in about 50 or 60 stocks. So if you wanted to buy or sell a stock through your broker, he had to actually go in front of the specialist who made a market in that. So I did that during the crash of 1987 and the bull market that followed. So in my experience, in my 44 years of my trading career, I've traded just about everything you can imagine. In fact, so many students always say, well, Steve, there's this new technology out that really determines in advance and it predicts what a stock or what a future is going to do. Trust me, it most likely has been around before. Even though we didn't have the technology, it's just been rebranded and put together in an entirely different package, but it's pretty much the same things. And we can tell you what works in terms of consistency and what doesn't. So that's what we do here at Specialist Trading. We're basically just an educational company trying to educate you and teach you the things that have shown consistency in the past so that ultimately you can make your own trading decisions. As I often state, the only traders I know that are still trading in my 44 years are the ones that make their own trading decisions. They don't go to chat rooms. They don't wait for earnings to come out. They don't listen to economic reports, and they don't watch people on TV after the market is closed tell them what they think the market's going to do. What they do is they have a sound but simple plan and then make all their decisions based off that. Those are the only ones that really have stood the test of time. Sure, you may have a good couple of years following someone in a trading room or some system, but really, over time, it's not going to last. That's been my experience. Most of the traders I know that made really killings or tons of money in a relatively short time have given it all back. So that's not what really trading is about. That's more of a gambling mentality. What we want to do is make our students around the world long and sustained traders so that they can be trading decades in the future. And that's my goal as an educator. So you'll see that attention to detail in today's educational presentation. But once again, before we begin, we're required by law to share this with you. So please take a moment to view our disclaimer. I'm going to show you a lot of performance results using these two components, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated. And since we are an educational company, all examples are strictly for educational purposes only. And as well, if you haven't done so already, please feel free to follow us on Twitter. I post different things on a daily basis, anywhere from bits of financial wisdom to signals that our strategies have generated. And I go into detail on what the concept was behind those particular strategies. So there's lots of great free education on a daily basis. So please feel free to follow us on Twitter. Now remember, my philosophy and the philosophy of a company's pro trader strategies and specialist trading is that you have everything you need right in front of you. In other words, the chart tells you just about everything you need to know. The only trouble is we're always taught to listen to something or someone else. Even myself, 44 years ago, was no different than the way it is right now. We didn't have chat rooms or trading rooms then, but we had subscriptions to so-called gurus that knew everything what was going to happen. And so I subscribed to all of those. I made major distinctions about what the earnings estimates were supposed to be, so I followed them, waiting for them to come out. I also watched the pundits after the market closed on TV, and all the same things that we've been taught today. Looked at the economic numbers, the jobless claims, and nothing seemed to work in terms of consistency. And sure, I would have a couple of good winners here and there, but I'd end up giving it all back like days later, even months later. So the point is, we're striving for consistency, and consistency can only come from you making your own trading decisions. So this is my goal as an educator, to teach you, not to trade for you, not to force feed you signals on a nightly basis, not to tell you what I think the market's going to do. Is it going to top out or is it going to go straight up? Not to do that, but to teach you so you can make your own trading decisions. This is the specialist edge, the same edge that was taught to me some 4 decades ago and what has sustained me. And hopefully I can instill the same knowledge that was taught to me in all of my students around the world, okay? Now, once again, this is a class, so ask me as many questions as possible, but please wait till the end of class to ask questions because I have a lot of slides here today. I want to go through a lot of them, and many times the pictures are a lot easier to understand and they explain things much better than stopping for every slide. Now, this is being recorded, so if you have to leave early or if you have technical issues, don't worry. Each and every one of you will be sent a link to this recording, okay? So we have a good crowd here today. Once again, if you happen to join us a little later, please wait till the end of class to ask any questions. All right, let's begin today's educational presentation. So we're going to be talking about these two components, but let me first start out what I was taught. Remember, I was taught most likely the same things you were taught, but only about 4 decades earlier. All the things you were taught about how to trade, looking for support and resistance, looking for volume, waiting for the jobless claims, listening to the guys on TV, waiting for the earnings. I was taught those same exact things. And trust me, they didn't work in terms of consistency. I overcomplicated my trading tremendously. I don't even know how I was able to take a signal because I had so many requirements and so many rules that by the time they all lined up, it's amazing that I was even able to trade. My trading was so complicated. So here's what my mentors taught me and what I learned trading on the floor of the exchange. My mentors told me that, Steve, the market is always giving you a clue as to which direction it wants to go. You notice here the market was giving me the clue. Not some guy on TV or some guy in a chat room. The market was giving me a clue. So my job and your job as a trader is really simple. It's twofold. It's to listen to the market, learn how to listen to it, and then once you decipher what it wants to do, you jump on board. You see, there's no mention here as your job is to figure out the earnings estimates. Or there's no mention here of your job is to find out where support and resistance is. Or there's no mention here to say your job is to find out what the new administration is thinking about economic numbers and what direction they're going to be taking the country. There's no reason to overcomplicate your trading the exact same way I did. Your only job is to listen to the market. Funny, that's the source of what we're trading, but that's the last thing we're taught to listen to. We're always taught to listen to an outside source. Here's the best thing about listening to the market or learning to listen to the market. It is so much simpler than trying to decipher what the earnings estimates are going to be or trying to figure out if the market's topping out or going straight down or going straight up. It's so much easier. So it's the easy things that work. I found out in over 4 decades of trading that I used to think the more complicated and the more rules and regulations you placed upon your trading plan, the more valid it would be. And then ultimately I learned that it's the exact opposite. The simpler, the easier the things that you apply, the less rules, the less requirements, the more valid it is. So what if there was a tool designed to have you on the right side of the overall trend? Because that's the main thing. We just want to find out what the market wants to do, firstly, by finding out the overall trend. Well, there is. This is component number 1. You've heard me speak about it before. This is called our buy-sell line. Excuse me. Now, the buy-sell line is not some convoluted indicator. It's not something built off AI. It's not something you have to spend $10,000 for. It's the 50-period simple moving average. I want you to plot. I don't care what chart you have. I don't care what market you trade or what time frame. I want you to always have a 50-period simple moving average plotted on your chart at all times. And here's how to apply this correctly. Before you have a trade, before you pull the trigger, remember, we're not talking about strategies today. We're not talking about rules to go long or to go short. We're just saying whatever you want to trade, I don't care if it's based on the full moon. All right? Before you pull the trigger, you have to ask yourself this question. Where is price, regardless of time frame, regardless of market, where is price in relation to the buy-sell line? I often say this to my students. I say you should write this down on a Post-it and have it posted right onto your computer screen and ask yourself, where is price in relation to the buy-sell line? This is extremely important. Now, you're only going to come up with 2 possible scenarios, because if price is above, then you should only have a buyer's bias. So this means that what if you have a sell order? Okay, and you go, oh, this is great. That chat room said that this thing is overbought and it's well above the 50-period moving average. It's giving me a sell order. Well, the odds are against you that it's going to work out. Okay, I hate to say it, but I know you've been taught that, well, this is overbought. It's way overextended. The odds are against you that you're going to have a great selling short signal if you are above the 50-period moving average. So therefore, you should only have a buyer's bias. Conversely, if price is below, then you should only have a seller's bias. You never want to buy below the 50. Now, the first thing my students say is, okay, Steve, that's great. And then about a week or 2 later, they go, well, I saw this great setup. It was right below the 50-period moving average, and it went straight up. So this doesn't really work. Remember, this will happen from time to time. This is not 100%. Nothing, in fact, is in the market or in life 100% guaranteed. You're never going to find that anywhere. What we're trying to do is put the odds in your favor. This is a numbers game. This is not about having 100% winners and 100% track record. This is about putting the odds in your favor so you can be trading not just for a good month, but for maybe a good decade, 20 or 30 years. That's what we're trying to instill in you. And over time, if you buy below the 50-period moving average and sell above, you will have nothing to show for it. You'll give everything back most likely. All right, so let's look at that example in CHK that we showed you at the very beginning of the presentation. Most traders would say, well, Steve, this is in an uptrend. I got to be long, right? When we apply the 50-period moving average, we ask ourselves that question. Where is price in relation to that? Is price above? No. So therefore, we're not going to buy. We're going to be looking at this from a seller's bias. And as you can see, the overall trend is now down. So we want to be in sync with the overall trend. And look what happened. So how long would you have lasted if you went long, let's say somewhere here or even here at the top? Most likely, you would have either taken a large loss or held on and said, well, now I just turned into a long-term investor and I'm holding this for the long term, right? I just wait for it to come back so I can break even. How many of you have gone through that, right? We've all done that. I've done that. It's because you're out of sync. You haven't learned to listen to the market. I mean, think of it. The only reason why you lose money is because you're out of sync with the market. You can't lose money if you buy and the market goes up, right? Or you can't lose money if you sell short and the market goes down. It's the opposite. You're losing money because you didn't listen to the market and you're out of sync with it. So our goal is to try and get you to be in sync with the market. The same thing goes for this example in Zoom, ZM. Looks like a downtrend, right? It's going straight down. But we apply the 50 period. We ask ourselves, where is price in relation to that? Well, price is above. So where most traders, non-educated, would look at this and say, well, Steve, this is a downtrend, the educated trader, now that uses this simple and easy rule to follow, will say, well, this is a buying opportunity. This isn't a downtrend. This is a sell-off in an overall uptrend. Many times they call that a pullback. And since we're in an overall uptrend, we don't want to sell. We want to look for buy setups. And whatever strategy or technique you're trading, that would have been a wise idea. Okay? So you see how simple this works. Now, obviously, once again, let me repeat, this does not work 100% of the time. That's okay. It's okay. A perfect example, I said this the other day in another webinar. I had my first trade, I lost. I'm trying to remember. My first trade, I had a loser. And I possibly could have had my second trade a loser as well, but my first one was a loser. My second and third were winners. They made it all back and then some. So it's not about always having winning trades. It's about being able to recoup those losses and being sync. Remember, this is a numbers game. This is not 100% guaranteed. It's just about numbers. 2 steps forward, 1 step back. All right, so that's component number 1. Always apply. Why? Because we want to listen to the market, and the first thing we want to do is figure out what the overall trend is. But now we want to figure out what the short-term trend is, okay? Because we want to see these two in sync. Once these two are in sync, this is a high probability setup that we know which direction the market wants to go. So how do we find this? Do we have, once again, to have some convoluted indicator? Do we have to have some algorithms, some AI type of stuff? No, it's very simple. We're going to use our top bottom 25% bar. So what exactly does this mean? Well, when a bar closes in the top 25% of its range, the market, not me, not some guy on TV, not some earnings report, not some institutional buy or sell order, the market is saying it wants to go higher on the short term. Okay? So as we look at this generic chart here, how do we figure out the top bottom 25%? Well, all you have to do is divide by 4 separate but equal parts. And if you close in that top 25%, what is the market telling you? It's saying it wants to go higher on the short term. That's it. Now, conversely, when a bar closes in the bottom quarter of its range, it's telling you, once again, not some guy on TV, not some convoluted indicator, but the market is telling you it wants to go lower on the short term. All right, so you have a generic bar like this, makes no difference what market, makes no difference what time frame, absolutely makes no difference. But if you divide by 4 separate but equal parts, if you close in that bottom quarter, the market is saying it wants to go lower on the short term. Now, when you combine these two components, the overall trend of the 50-period simple moving average and the short-term trend of the top bottom 25%, you have the makings of a high probability setup. Why? Because the market is telling you overall and short-term it wants to go a certain direction. So therefore, if price is above the 50 and you have a bar closing in the top 25%, the market is giving you a high probability signal it wants to go higher. Conversely, if price is below the 50 and you have a bar closing in the bottom 25%, there is a high probability signal setup that the market wants to go lower. Now, please remember, as I stated in the beginning, this is not a strategy. So just because you see these things, it does not mean, oh, well, Steve said just is a high probability sell or a high probability buy. Remember, that's part of a strategy. We're not talking about strategies today. I'm just sharing with you these two components that will help you listen to the market to decide what it wants to do. And then once you see these two components line up, when they're in alignment, then you can apply any strategy in that direction. Remember, the job of a trader is to listen to the market, which we're learning today, and then you jump on board. Now, how you jump on board is not the topic of discussion today, but you can use anything. Anything you've used in the past, you will have a higher level of consistency. Now, you know why this is one of our most popular presentations, because students are always requesting this. Okay, so let's look at some older component number 1 and 2 examples. Remember, these are older, but these are just basically to teach you the concept. After we finish this, I'm sure you'll be able to go look through charts that are up to date up until yesterday and see how well this works. Okay, remember, lastly, everything you're seeing today is coming from the Primo charting platform. We make it so simple because it's one click away. There's really no hard work in it for you. You don't have to apply the 50-period moving average. You don't have to divide bars by 4 separate but equal parts. They are one click away. That's how simple it is on our platform. We made it this way to teach traders how to trade. Okay, we look at this older chart of OSTK. Someone looking at this, that's not a student of mine, would say, well, Steve, there's major resistance here. That chat room I go to says this is where the institutions are selling, and I don't want to go against those big buck institutions, so I probably want to be a seller here too, unless we break out, but I'm going to wait for that. Well, let's apply the buy-sell line. Remember, on our platform, if I backtrack here, it's right here in the upper left-hand corner, buy-sell line, and we have 4 separate different ways to view the buy-sell line. Let's just pick the simplest, which is a 50-period simple moving average. Click that on and ask yourself, where is price in relation? Well, the last 5 bars are above. All you need is 3 to 5 bars to tell you what the direction is. So we don't care about resistance. I mean, there's no such thing as resistance, in my opinion. One trader's resistance is another trader's support. It's silly. It's too subjective, okay? So what is the market telling you instead of some institution or some Fibonacci support and resistance? The market's telling you it wants to go higher, but on the overall trend. Now we want to see what the short-term trend is. So in the upper left-hand corner, right next to buy-sell line, we placed them there on purpose so you students could use them in conjunction. And click that on in the drop-down menu. Click on signal arrows, and it will share with you if a bar closed in the top or bottom 25%. You see how simple this is? And once you have them clicked on, they'll always show you. And look at right here, you had a closing at the top, and right here another one. So the short term and the overall trend are in sync with each other. There's nothing you have to do. This is telling you now you have the green light that the market wants to go higher. So if you have a strategy, or if your technique or method is based on the waves of the ocean, it makes no difference, and it gives a buy signal, well, you're in alignment. You have a high probability setup. You notice how so many traders, myself included when I first started, were all taught, well, Steve, the way I find out what the overall trend is I take the higher time frame. So I have to have 2 charts up. If I'm trading a daily bar, I have to see that the weekly chart is in an uptrend, and then I have to see that the daily are in an uptrend. That's how I was always told to have the overall and the short-term trend in line. I often say this, I'll say this again, this is just my opinion, but I have found no consistency in that method. That is an urban myth in my opinion. All that does is it takes you out of some nice signals because you're waiting for those 2 things to line up. So there's no reason to overcomplicate your trading. Remember, as I said in the beginning, most traders overcomplicate their trading more than it has to be. There's no reason to look at 2 different time frames if you don't want to. All you need to do is look at the 50-period moving average overall trend and the 25% top bottom bar. That's it. So right now they're telling us that they want to go higher. That's all the information we need. And look what happened, okay? And as we went higher, you see how you had these continual bars closing in the top 25%. Here's an example in Virgin Galactic, okay, SVCE. Same thing, prices above the 50, and right here, these last 2 bars, they were closing in the top 25%. So right here is our high probability setup that the market wants to go higher. This is where we start looking for structure to buy. Stock went up 35 points. KLAC. Now, do you notice how the market was going lower? The entire time it was going lower, it was not closing in the top 25%. But this was a buying opportunity. Even though we were going lower, we were above the 50. So the overall trend is up. We're just waiting for the short-term trend to be in sync. And right here is where it's telling us now we're in sync. And then look what happened, 58 points. You see how you're finally starting to learn to listen to the market? And remember, as I said in the beginning, learning how to listen to the market is so much simpler than trying to figure out what the earnings estimates are going to be, or trying to figure out which direction the country's going with the new administration, or trying to figure out what the support and resistance levels are. It's so much simpler. You've done it right here, and they're just 2 clicks away on our platform, the buy-sell line and the top bottom 25%. Let's look at W day, okay? Work day. Now, all we're looking at is 3 bars. We had 1 bar close below, but then the next bar closed back above in the top 25%. So that's all we need. You don't need a lot of information. And the stock went up 52 points. You notice as it was going up, it continued to tell on the short term that it wants to go higher. As we look at BIDU, same thing here. We're above the 50-period moving average. We have 1, 2, 3, 4 closes above. Now, the market hasn't really done anything. It's pretty much just gone a little higher to sideways, but it's screaming that it wants to go higher. And 185 points in the next month or so. Okay, look how when it went higher, it continued to generate these top 25% bars. Let's look at an older chart of Tesla. Okay, now we have component number 1 and component number 2. Here's component number 1. Click on the buy sell line, click on 50-period simple moving average, and right there we are above the 50-period moving average. Now component number 2, we closed in the top 25%. We click on top 25% just to verify, and yes. So that's all the information we need to tell us that Tesla wants to go higher. Now, Tesla could change its mind anytime. It could change its mind a week later. I mean, any stock or future could. It's not just Tesla. Any market you're trading is most likely, going to change its mind at some time. It can do it after 6 months. It can do it after a couple of weeks. That's okay. Remember, our job is not to try and predict what it's going to do. That's a gambling mentality. Oh, this team's going to win the NBA championship. Oh, this team's going to, lose tonight. That's a gambling mentality when you try to predict things. A true trader, a professional trader, just listens to the market and goes with it. Doesn't care what direction. Doesn't care if it changes its mind. Just go with it. So this is telling you it wants to go higher. Tesla gained over 400 points in just 2 months. And you see how all the bars above the green arrows, those are all the bars that closed in the top 25. So it's signaling that it wanted to continue going higher. Now, I've shared with you a number of examples where the market was going up. What happens if we go into a bear market? What happens if things change? Last week, we had a really strong downward move. Appears as if that's over, but who knows if it's going to start again. Could happen next week again, could happen next month, maybe next year. No one knows. So you have to be prepared to switch gears. That's okay. Remember, as a trader, we don't care what direction the market goes. We really don't. I don't care if the market goes down or up. I just want to be in sync with whatever direction it's going. That's the way a true trader thinks. You see a lot of traders and say, gosh, this market keeps going lower, it keeps going higher. I just hate it when it's like this. Well, why? If you learn how to be in sync with the market, you really don't care what it does. But let's, suppose that it does go into a bear market. Well, let's look at this older example in Facebook, okay? 2 bad closes here in the bottom 25%, but we need to look at our 2 components. The first one, the buy-sell line. We click it on 50-period moving average, and we've just had 1 close below. So this is not a lot of information. This is more an aggressive way to trade. But as we see here, we click on top bottom 25%, and we have a signal arrow. Even though we opened above the 50, where did we close? In the bottom 25% below. Now remember, I always tell my students, especially when they're learning these techniques, you need at least 3 to 5 bars below the 50-period moving average to generate an overall downtrend. This is a more aggressive way to trade. We have a lot of traders who've been trading for 20, 30 years. We even have some hedge fund members that are students of ours. But if you're more aggressive and you've been around and you feel confident, you have enough account size, you don't have to wait for that. But in the beginning, while you're learning this, you'd need a little bit more data below the 50-period moving average. But as we say, this was an aggressive setup, and it still worked. Facebook fell 27 points, and you see this more confirmation of the bottom 25%. Here's another example, an aggressive example, where we have 2 bars closing below, and this one closed in the bottom 25%, as represented by the red bar. Fell 15 points in the next week. As we look at gold, this is a Barrick Gold Corporation. We are below the 50. We have enough bars here below. And this is telling us that we are definitely going lower because we have 2 red arrows, which signify a bottom 25%. So even though the stock hasn't done much, as you can see, we've pretty much just gone sideways. Well, we have the 2 red arrows and the overall trend. So we're going lower. And as you can see, in the next month or so, the stock fell 5 points. Doesn't seem like a lot, but that was roughly about 25% of its value. And look at all the red arrows here, confirming that it wants to go lower. Here's an older chart of CTAS, okay, Census Corporation. Once again, a little bit more aggressive. We have 2 closes here, but they both have red arrows above, signifying that they closed in the bottom 25%. 35 points in the next 2 weeks. You see how the market is telling me? I've never mentioned what the earnings were or what some news that came out or what happened with the market. It doesn't matter. I stopped looking at that 4 decades ago. Now, you've heard me say that a million times, but now do you realize why I don't care about news? Because the market is telling you what it wants to do. Here's an example in Lockheed Martin. Okay, we looked at this as it was going straight up. We applied the 50, and it doesn't matter if it's going up. Okay, it's in an overall downtrend. So we don't care if it's going up and the overall trend is down. We're only looking to be a seller. But we want to make sure that the short-term trend is in sync with the overall trend. So we apply the top bottom 25%, and yes, we close in the bottom. So now we have the two in alignment. This is a high probability setup that the market now wants to start going lower. And the stock fell 28 points in the next 2 weeks. Okay. Now let's look at some other markets and some other time frames real quickly, because many times I focus on stocks, and a lot of students say, well, Steve, you know, I trade other markets, so I guess this doesn't work for me. No, it works for every other market, every other time frame. These are universal truths. These are universal rules that can be applied to anything. I use them on my intraday trading of the E-mini. Okay, so it makes absolutely no difference. Here's a 1 hour chart of the euro dollar. Obviously, in hindsight, it's been going straight down, right? But how could we have found out early on up here? Well, the first thing we do is apply the buy-sell line. Doesn't matter if we're trading currency pairs. Makes no difference. 50-period moving average, and right there. Okay, we already knew that the overall trend was lower. There's no reason to buy the euro dollar. There's absolutely no reason. Anyone who bought the euro dollar here on this 1 hour chart, do you think they would have made money? Okay, you know, sure, they say, well, Steve, if I would have bought right here in the low, I could have had a couple of good hours and I got out. Well, sure, but you have to be really skilled in advance. Isn't it a lot easier just to relax and say, listen, I'm just going to use these bounces as selling opportunities? Now, if we want to get the short-term trend in sync, to have a higher probability setup, we apply the signal arrows, and guess what? They were giving us clues well in advance that we wanted to go lower. Same thing can be applied to a 1 minute chart of E-mini futures, okay? I took it down as a small time frame as possible just to let you know that it makes no difference what market or what time frame. The same thing here. In hindsight, obviously, it's been going lower. How could we have taken advantage of this if we're a day trader, though? Well, at the buy-sell line, click on 50-period moving average, and we were originally above, but right here, about 7-8 minutes later, we closed below. Okay, so at this point, we knew now that it wanted to go lower. Now we apply the top bottom 25% to make sure we're in sync with the shorter trend. And right here, the very first 5 bars were giving us clues. Okay, see how simple that was? And basically, you could have made, I believe, about 15 points, even selling somewhere around here to the downside in just about half hour. That's $750 per contract. Lastly, let's look at a 2 hour chart of Bitcoin. Okay, this is an older chart, but Bitcoin was falling out of bed here as well. A lot of traders this last week have done poorly with Bitcoin. You think this concept could have helped by applying the 50-period moving average along with the top bottom 25% feature? Look how the market tells you it wants to go lower. Okay, so right here at this point, we knew not to be a buyer at all of Bitcoin. Why? Because the overall trend was down and it was in alignment with the short-term trend. That's a high probability setup. Remember, the goal of a trader is to, 1, learn how to listen to the market, which I've taught you today, and then 2, jump on board. Now, how you jump on board is what we'll cover in other Saturday webinars when I teach you strategies or different ways to trade. But right now, we're learning the simplest way I know of listening to the market. Okay, so let's recap. Component number 1, you will have a higher level of consistency if you only buy above the 50-period simple moving average and only sell below the 50-period simple moving average, okay? Trust me, I've been doing this for 4 decades, and even though it's not 100% foolproof, remember, it's about numbers. It's a numbers game. Over time, you'll have a higher level of consistency. Why? Because you're in sync with the overall trend. Now, if you want to kick it up a notch, we go to component number 2. When a bar closes in the top bottom 25% of its range, it's telling you which direction it wants to go on the short term. So if you want it to be a little bit more conservative, you would wait for the first top bottom 25% bar to confirm the overall trend, and then that would be giving you the go-ahead to start applying some structure, okay? Now, when you combine these two components, you have the makings of a high probability setup. Now, don't just take my word for it. I want to give you a homework assignment. Study and research these two components. Then go back and look at your last 10 to 20 trades. Paper trade to see if your results could have been improved by applying these two edges. I can almost guarantee you that they would have. I can almost guarantee you that you would have less losses and you would have be more in sync with your winners, because these are really great ways to be in sync with the overall and the short-term trend. You don't have to have two different time frames. I mean, you can always do that if you want to, but once again, why overcomplicate things? All you have to do is look at one chart. I don't have 20 computer screens in front of me. The way I see pictures sometimes of these master traders, I don't, have tons of phones and the TV on and looking at the stock market news and everything. I don't do any of that. I have a one screen. I look at one market, and that's it when I'm trading, and that's it. I'm not watching, the so-called trading gurus on TV. I'm usually watching a movie or listening to music. I mean, there's no reason to overcomplicate things and make your trading more complicated than it has to be. So ask yourself, do you think these simple components can help your trading for the remainder of 2021? I think your answer would be a resounding yes, and you can start applying them right now. How would you like to have some more high probability components? Some more edges that can increase your odds for consistency? Well, we have a great attendee discount and a great offer for all of you today. We're going to offer you our Secrets of a Stock Exchange Specialist video seminar. Now, some years ago, I was asked to be the head speaker at a conference in Denver, Colorado, where I spoke pretty much all day, and they recorded most of it. It's a 3-hour presentation. So this is what our video seminar is, where I talked about many more ways in which to elevate your trading, lots more edges, which indicators to use, but more especially which ones not to use. I went into the difference between a system versus a strategy. But here's the most important part of this 3-hour presentation. I give you the complete rules to one of our most consistent pullback strategies. That's strategy number 1. So let me share with you what this looks like. This is a great, great addition to this offer. A pullback strategy, is one that likes to buy at lower levels in an overall uptrend and likes to sell at higher levels in an overall downtrend. So looking at ATVI here, pretty much someone would say, well, we're in a downtrend, we're kind of going lower, and strategy number 1 generated a buy signal right near the lows. Someone would say, well, why would you want to buy here? It's been going lower, the earnings are terrible, and the market doesn't seem very good. We just follow what the market wants to do, and the stock quickly shot up 13 points in the next week, okay? Same thing works on the downside. Looking at Verisic, we can see here that we're headed higher, okay? We're kind of slowly going up, but it's a nice upward stair step. We're making higher highs, lower lows, or I should say higher lows. So we've got the definition of an uptrend, right? Well, according to strategy number 1, this was a rally or some type of rise in an overall downtrend. Generated 2 signals here right at the top. Stock fell eventually 30 points in the next week. You're going to get all the complete rules to all of the strategy, learn how to trade it aggressively as well as conservatively in this 3-hour video course. So this is 3 hours of trading techniques plus a full strategy. We're going to give you a great, great discount. Here's the only problem. This discount is for a very limited time, most likely just for 48 hours at the most. Right? Usually the Secrets of a Stock Exchange Specialist video seminar will run close to $1,000. There's that much information jam-packed. Over 4 decades of information I've accumulated. Here's the good news. We're going to discount the price down to $37. $37. I'm sure most of you lost more than that this past week, right? Having a tough week. $37, you would have wished you only lost $37. Well, for $37, probably the cost cheaper than a good meal, you can have over 4 decades of training, over 4 decades of information, things that have taken me that long to accumulate right there, and it's yours for life. This is not something that expires and that, oh, it's only good for a couple of months and then you have to give it back. This is yours. This is a video seminar, and you can learn all these things plus the complete rules. But remember, probably only for the next 48 hours. I would check with Pro Trader Strategies, but they're in charge of all the pricing and all the discounts. For $37, you really can't beat the amount of information that is here. So here's how to take advantage of this great, great offer. You can call at 310-598-6677. That's if you want to sign up over the phone. I know a lot of new students like to do it that way. They feel more comfortable talking to someone. Or if you want to, you can click on the link below. It's not a live link, but that link will take you to the sign-up page. You can sign up online. Now, that's not a live link once again, but they've just posted a live link in the chat box. So you can click that on, and it will take you to the same page. So there's two different ways to take advantage of this, but I must say you have to really hurry up because once again, this is only going to be for the next 48 hours. I mean, we're really discounting this from nearly $1,000 down to $37. I think all of you will be able to take advantage of all the information here. And remember, the information is universal, can be transferred over onto any market and any time frame. Now, I stated we would take questions. We have about 10 or 15 minutes left. So if you have any questions, now is the time to ask. Just go to your question and answer box. I promise I will answer them to the best of my ability. Okay, some people are saying here, do we have to apply the 50-period simple moving average? Can we apply a 20-period EMA, that's an exponential moving average, or even a 100-period simple moving average? Well, that's a good question. First of all, remember the 50-period moving average is not something that is a system or systematized and it's been back-tested in research. This is just something to tell you which side of the market to be on. It's not a system. It does not say, well, hey, we closed one bar above, so I guess I buy at the market, right? No, that's not what it's meant to be applied as. It's just a way to tell you which bias you should have, either a buyer's bias or a seller's bias, and this will give you the overall trend. Now, I have experimented with exponential moving average, displaced moving averages, different time frame, 20 period, 34 period, Fibonacci numbers, 100, 200. And for my money, the best way to interpret the overall trend is by using the 50. Why? Because it's so easy to transfer. Let's say you like to trade 5-minute bars, okay? Well, the 50-period moving average will work just as well on a 5-minute bar. Whereas if I were trading, let's say, weekly bars, okay, well, maybe I may want to use a 100-period moving average or a 75-period moving average, which may apply well for weekly bars. But then if I switch over to a 5-minute bar, well, that 100-period moving average is not going to help me that much, okay? So I wanted to give you something that transcends all those different time frames, all these different markets. And for my money, once again, the 50-period is the best. Feel free to experiment. This is not, once again, a system where it says, no, the only way you can do this is with the 50. No, I want you, and I encourage my students to find out what works best for them. Remember, you're in charge. You are making your own trading decisions. That's our goal. So I can't sit here and tell you, you have to trade this way. That goes against our philosophy. If you feel inclined to experiment, go ahead. But as an educator, I'm giving you what I feel is the best, and it's the 50-period simple moving average, okay? Question, how do we get the platform and other strategies? Well, once again, contact Pro Trader Strategies. They're in charge of all the discounts, and they're having some great discounts now as well for strategies as well as the platform. They have trading consultants manning the phones right now. They can give you, there's no obligation, they can give you a pricing if you want to get the platform. If you've purchased anything before in the past, I'm sure they will give you a good discount, a good offer, because you're already a member of ours and a course member or a product member. So there's lots of different ways, but please remember, I would suggest the best way is to call them directly at 310-598-6677. Remember, there are people answering your calls right now, and there's absolutely no obligation. I know a lot of times people are afraid. They say, well, if I call, they're going to try and sell me something. They're very qualified, and they're not. They're traders themselves. They're not going to try and sell you anything. If you don't want to buy something and just want to get a quote, that's fine. But they're very flexible as well, and so they're willing to work with you, and they can give you a quote, and they can steer you in the right direction in terms of a strategy, okay? So that's a great question, but I would suggest giving them a call. In fact, probably for signing up for this great offer, I would call them up, okay? But remember, don't sleep on this. So many traders, we have some great offers from time to time. Sometimes our offers are $3,000. Sometimes they're $700. This is one of the best where we're down to $37. So this is going to only be for the next 48 hours. So don't sleep on this, okay? Question, is there an easy way to visualize or see the 25% closure if you don't have PTS charting? Well, I think if you do it over time, yes, there is, because I've been doing that for 40 years now, and I personally do not have to look at the PTS Primo charts for that because I automatically know where it is. I've been doing it for so long. But, you know, I don't want you to wait around for 40 years to be able to figure that out. The best thing, in my opinion, is to apply the PTS Primo charting platform with your trading. You know, call up Pro Trader Strategies, because once you click on the top bottom 25%, I mean, it stays there applied on the chart. So whatever chart you bring up, you'll see automatically where it is. There's nothing you need to do until you unclick that arrow. And the same thing with the 50-period moving average. So it's really, we made it simple so that you wouldn't have to do the hard work. When I first learned this concept 40 years ago, I had to do that hard work and with a hand calculator divide everything by 4 and make sure I did it correctly and make sure I had the closing in the correct place. And trust me, it's very cumbersome. So when I worked with the programmers and with Pro Trader Strategies, our first goal was to make it as simple as possible. So I can't think of a simpler way to do it than by having the platform. So once again, there's no obligation. If you don't want to do the hard work, I would contact Pro Trader Strategies, okay? It's really simple. But if you want to do the hard work, I think the best thing to do is just subtract the top range from the bottom range and divide by 4 and then see where it closes. But it gets very cumbersome after a while, okay? Good questions, though. Remember, as an educator, I want you to be able to apply these as simply and easily so that you can increase your odds. Last thing is, someone's asking about, is this actually a homework assignment we have to turn in? No, it's not. It's just really something I want you to do because, as I stated, the only way one becomes consistent is by making their own decisions. And so you have to put the work in, the homework. I want you to, you know, do the research. I want you to, you know, not just take my word for it. See if it could have helped you. Most of our students that sign up for this product, when I do this a couple of times a year, they'll say, gosh, I didn't know how valuable these things were. And they're so simple. Once you see them, they're all over the place. Yes, they are. But see, we're never taught to look for them. We're always taught to figure out, you know, what the jobless claims are going to be, or what direction the economy is going. Or we're always taught to go to some chat room because that guy must know what he's talking about, or go to some trading room. But we're never taught to listen to the source. That's what we're trading. And trust me, it's so much simpler. So we designed it to be as simple as possible and to put you in charge. But do the work. Go back and research your last 10 to 20 trades. I'm almost certain, I can almost guarantee, if you had applied these, it really could have helped your trading, okay? Okay, great questions. If there are no further ones, I just want to say thank you once again. Remember, if you have any questions, I can't imagine having questions over $37, but if you do, contact Pro Trader Strategies. They're very flexible. They'd be willing to give you a quote if you want more information, or if you want to at least sign up with them. They'd be more than happy to take your order over the phone by calling 310-598-6677. Now, as we take one last look at our disclaimer, I just want to thank you so much for attending today. I really wish you the best of luck. I hope I taught you something today, but more importantly, I hope you become students of the Secrets of a Stock Exchange Specialist course. Thank you so much for attending today. Have a great weekend. I'll see you next time. Bye-bye.